India's Finance Minister Nirmala Sitharaman has unveiled the country's budget for the next financial year, being dubbed the blueprint of India at 100. It includes the highest ever capital expenditure outlay in infrastructure and the agriculture sector. New Delhi has also reworked its personal income tax slabs under the new regime, bringing huge relief to the country's middle class.
Those with income up to 5 lakh do not pay any income tax in both old and new regimes. I propose to increase the rebate limit to 7 lakhs in the I propose to increase the rebate limit to 7 lakh in the new tax regime.
While the new scheme has become a default, the government has said that the old personal tax scheme is still valid, but there will be no change to the structure.
The new tax rates are 0 to 3 lakh, nil. 3 to 6 lakhs, 5%. 6 to 9 lakhs, 10%. 9 to 12 lakh, 15%. 12 to 15 lakhs, 20%, and above 15 lakhs, 30%. This will provide major relief to all taxpayers in the new regime.
Sitharaman called it the first budget of Amrit Kaal, which is the 25-year period or 25-year period culminating to India's 100 years of independence. The finance minister said that India's economy has grown to the 5th largest in the world from the 10th in just 9 years.
The world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track and, despite a time of challenges, heading towards a bright future.
Speaking on fiscal deficit, as Sitharaman said, the target of 6.4% will be retained for the current fiscal year, but it will be lowered to 5.9% for next year. She said that India's capital investment will be increased by 33% to 10 trillion rupees or 3.3% of the total GDP next year. The Indian finance minister listed 7 priorities of her government.
The budget adopts the following 7 priorities. They complement each other and act as the Saptarishi guiding us through the Amrit Kaal. Inclusive development, reaching the last mile, infrastructure and investment, unleashing the potential, green growth, youth power, and financial sector.
India has also boosted its defense budget by 13%. The defense ministry has been allocated rupees 5.94 lakh crore. Focusing on green growth efforts, the finance minister said her government aims to reduce carbon impact, boost green farming as well. 350 billion rupees have been budgeted for energy transition.
Green growth. We are implementing many programs for green fuel, green energy, green farming, green mobility, green buildings, and green equipment, and policies for efficient use of energy across various economic sectors. These green growth efforts help in reducing carbon intensity of the economy and provides for large-scale green job opportunities.
India has also included artificial intelligence. Sitharaman said that India will set up 3 centers of excellence for artificial intelligence in top educational institutions. And with this, it will realize the vision of Make AI in India, as well as Make AI Work for India. Markets have cheered India's union budget, with the benchmark Sensex index surging 1,000 points. For more on this, we are joined from Washington, D.C. by Dr. K.V. Subramanian, Executive Director of IMF, the former Chief Economic Advisor of India. Thank you so much for joining us on WION. What is your reaction to the budget? And do you think that this budget will pave the way for India's growth as a global leader in the coming years?
So, Susan, I think this is a very good budget, keeping in mind that this was the last full budget before the election. Typically, in India, budgets like these before the elections are very populist. But the current government has resisted that temptation and has continued with the emphasis, on public capital expenditure and financial sector improvement that was started 3 years back, with the post-COVID budget. And as you were highlighting, the increase of 33% in the public capital expenditure together, states and center, with states being provided incentives through 50-year loans, the 13.7 trillion rupees of public capex, which amounts to 4.5% of GDP, the highest ever, both in rupee terms and percentage of GDP terms, has been budgeted. And I think, as the chief economic advisor, I had actually written about this policy change, focusing on public capital expenditures, which has in fact actually, worked in India's favor. If you notice, among all the large economies, India is the only one that is growing at 7% amidst a global economy struggling to grow at 1%, with inflation that is actually 70% of historical average, when advanced economies are facing between 2.5 to 4 times their historical average inflation. And that is because of the emphasis on the supply side, of which the infrastructure spending by the sovereign was a very important component. So that has been continued. I think the second key aspect is the financial sector. Here, the loans to the small and medium enterprises through credit guarantees, about 2 trillion additional outlays actually for that has been made in the budget. Apart from that, a fundamental reform, which is the creation of the National Financial Information Registry. I think that's a fundamental reform because it'll actually bring data, and thereby reduce what we economists call asymmetric information, of borrowers. Together with the many measures for reducing the compliances and thereby enhancing the ease of doing business, and increasing consumption through these tax breaks, I think Indian economy is poised very well to continue to be the leader in the global economy, not just this year, but in the coming years as well.
Dr. Subramanian, you mentioned the elections a bit earlier. Can you talk a little bit about what you think and what your take is about the Indian finance minister's tightrope between the popularity ahead of the 2024 election and fiscal prudence?
So, as I was mentioning earlier as well, populism has not been resorted to except for the tax breaks, but I think, some critics could possibly call it populist, but I would also look at it from the economic side as, that would foster consumption. If you look at the fiscal consolidation, in the 2021-22, financial year 2021-22, when public capex was increased significantly, the finance minister had then laid out a path for fiscal consolidation, and that is being adhered to, with 6.4% fiscal deficit, this year, and to be budgeted at 5.9% going forward. This is because if you look at the expenditures, overall expenditures, have only been increased by about 7.5%. This is in an economy which is expected to grow in nominal terms at 11%. So clearly there's been expenditure rationalization, especially on salaries, etc. Those have been basically rationalized. Overall subsidies also have been rationalized, thereby reducing expenditure. Together with revenue growth that is projected only at 10.5%, in a nominal growth of 11%, 10.5%, that's very conservative. So I would actually expect that the fiscal deficit will actually come out to be less than 5.9%, in this year. But I think, given some global uncertainty, it's good to be conservative, which is what the budget has done.
Well, thank you so much for that and making sense of all of this for us on WION. Dr. K.V. Subramanian, we hope to have you back very soon.